The US dollar is strong again this morning, especially against the yen. The US 10-year yield too is up again at a 16-year high, on higher for longer talk on US interest rates. That's coming up in our 5 Things in 5 Minutes. And in our bonus deep dive, we look into why Vietnam's economy is speeding up again after a slow start to the year.
Given the earlier concerns about growth this year, the government has been very, very active to provide support to the economy.
But first, in 5 and 5 with ANZ. Number 1, the strength of the US dollar against currencies in Asia was evident again overnight. The yen fell more than 1% at one point to 146.4 yen to the dollar, which is near a one-year high. And no doubt we'll have the currency markets on edge today on lookout for any signs of intervention by the Bank of Japan. Strong US interest rates, of course, are the key. The US 10-year yield rose again overnight to a fresh 16-year high of 4.35%. That's up as much as 8 basis points from Friday because markets are increasingly expecting the Fed will have to keep interest rates higher for longer to get inflation down. ANZ's head of FX research, Marjabeen Zaman, says markets are watching for Fed Chair Jerome Powell's comments on Friday night for more signs of higher for longer, and we're looking out for fresh PMI, manufacturing sentiment surveys due globally later tomorrow.
We think in addition to possibly more hawkish or tilted to the hawkish side comments from Chair Powell, we also have PMIs, flash PMIs coming out this week. And based on what we have seen in terms of the resilience in the US data, which led to the strength in the dollar in the last week, we think some of that will consolidate and will be dependent on the PMIs as well coming out this week.
Number 2, China's authorities surprised markets again yesterday, but this time by not cutting rates rather than cutting rates, which was last week's surprise. China announced a smaller than expected cut in a key bank lending rate and left one unchanged completely. China's banks cut the 1-year loan prime rate, the LPR, by 10 basis points to 3.45% yesterday, but left the key 5-year loan prime rate, the LPR rate, unchanged. ANZ's senior China strategist Zhao Pengxing says the People's Bank of China is trying to protect bank margins, which may slow future cuts in the LPR.
I don't think the government would like to let the commercial banks have some financial distress in the future. I think the PBOC would like to let the commercial banks to cut the liability cost. For example, cut the deposit rate cost first. Then we can see 5-year LPR may have some room to cut in the future.
Number 3, there's more signs of the gap between growth and interest rates between the US and the rest of the world, especially China and now Europe. We got German producer price inflation data overnight that was softer than expected, partly because of lower wholesale energy costs. There was actually annual PPI deflation of 6% in July from a year ago, which was a deeper fall than the consensus for 5.1% deflation, and the fastest deflation since 2009. Number 4, but those lower energy prices and gas prices may not stay there for long in Europe, especially if Australian workers decide tomorrow to go on strike on the big LNG projects in northwest Australia. Here's ANZ's senior commodity strategist, Daniel Hines, on why it matters.
We calculate the operations under threat of industrial action make up about 10% of global LNG supply. So anytime you get that type of impact, you tend to have a pretty sharp reaction in pricing.
Number 5, the pressure is coming off the retail sector in New Zealand's economy, at least. ANZ's chief New Zealand economist, Sharon Zollner, reports ANZ's card spending data shows a slowdown in recent weeks, which the RBNZ will like.
Well, while spending compared to a year ago is a mixed bag, there is a fairly consistent theme that spending has fallen over the last month or two across a pretty wide range of categories, actually, but particularly discretionary spending, which is consistent with the Reserve Bank's rapid tightening in interest rates really starting to impact on people's spending decisions.
ANZ's chief New Zealand economist Sharon Zollner there. Now it's time for our bonus deep dive, this time into Vietnam's economy. which started 2023 with weak growth. But some supports put in by Vietnam's government is now paying off. My colleague Catherine Dyer asked ANZ's head of Asia research, Khoon about those government measures.
Given the earlier concerns about growth this year, the government has been very, very active to provide support to the economy. The State Bank of Vietnam have cut their policy rates by 150 basis points so far. So the policy rate is not far off from the all-time low during the pandemic. In addition to that, fiscal policy has also been playing quite an active role. The government has allocated around US $5 billion in terms of support to the property sector in the form of loans and the like. The VAT, value-added tax, has been cut from 10% to 8% for this year in order to try and stimulate and boost domestic consumption. And there's been various other measures to try and encourage startups in the city, exempting corporate income tax, for example, for some entities, and some exemptions on personal income tax rates as well.
Okay, so are they facing any issues with inflation at all?
So for Vietnam, inflation is well managed. It's within the State Bank of Vietnam's 4.5% inflation target. So we are not seeing any issues around inflation at this stage, which is key reason why the State Bank of Vietnam were able to cut rates quite aggressively earlier this year.
Okay, so looking at the markets, what's happening with the property market in Vietnam?
Well, the property sector was hit quite hard late last year. Initially, there was a crackdown by the government on corruption, which caught up some high-profile individuals involved in the property sector. That led to quite a lot of loss of confidence in the sector, and there was a huge downturn in activity. And there were also concerns about large debt bonds that were due to mature. But since then, given the support in part from the government and some of the various measures, we're starting to see confidence come back in. The concerns around the upcoming bond maturities by some large property developers have eased. And we're starting to see signs that things are starting to recover in that sector now.
What about the information technology sector?
Well, this is actually one of the interesting bright spots in Vietnam. Now, we don't normally think of Vietnam as a key player in information technology, but they are an exporter of consumer electronics. But the equity market in Vietnam, particularly the information technology sector, has rallied quite strongly. Now, I mentioned that the broad equity market has performed very well. This information technology sector index has actually reached an all-time high earlier this year. So obviously, investors are confident about the outlook for this particular sector in the Vietnam economy.
ANZ's head of Asia research, Khoon there, talking to my colleague Catherine Dyer. I'm Bernard Hickey. That was 5 and 5 with ANZ for Tuesday, August the 22nd. Catch you tomorrow with more news on how those currencies are moving ahead of Jackson Hole. This podcast was recorded for publication on behalf of ANZ. All associated disclosures and disclaimers can be viewed using the link in your media player or the ANZ website through which you access this podcast. All care has been taken to report the views of ANZ Research in the creation of this podcast, but as an independent host, any differing interpretations are strictly mine and not ANZ's. Feel free to contact your ANZ point of contact with any questions.